The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Basil Chapman here. Thank you, Steve Rose. And then coming in with Daryl Martin, and 2 great hours. And starting off at 9 o'clock, my pleasure to be here Monday through Friday, 11 o'clock till noon with the Tiger Technicians Hour at 877-927-6648. And, of course, I'm followed on a Friday by Nico Dohan. And Nico has a health program. It's just a great show, 12 o'clock till 1. Then Daryl comes back, and then Dave White comes in at 3, and then, at 2 o'clock, and then 3 o'clock, you get Ken Shreve. And then 4 o'clock till 6, Tom O'Brien. So, what do we have? A full day of programming. Let's look at the market. Of course, the news came out, and as we expected, it would be a tad under 8%. And the jobless number did come in at about 7.8. Most importantly, when I was discussing the other day on what I thought President Obama should be saying, he should have been talking about the stock market. Should not be shy. Should have said, stock market's coming back. It's coming back to within 7 or 8% of its all-time highs. Everything but the jobs numbers are improving, and we are hoping that it'll get under 8% when it's announced on Friday, or at least at the next announcement. He just had it right there to say, well, he didn't do it. So it is under 8%. So this is going to be a very interesting time. And what are we looking at? Are we looking at the market saying, hey, everything is in place for a move higher if certain conditions are met, and at the same time, there's some uncertainty now that wasn't there, didn't seem to be there before. So are we looking at a market that has the upside capped, but at the same time has the downside capped? And that's really what I think I'm looking at. I'm looking at the trading parameters. Even though on the Dow we've made a nominal new high today, I'm waiting for the weight of evidence. And the weight of evidence says to me that, well, let's just run the numbers. The Dow is up 57 at 13,633. It did make 13,661, which of course is above the 13,653 level from the 14th of September. Now we've got the S&P at 1467. It hasn't gone to the new recovery high yet. So it's at 1467, up 576. You've got the comp index up 9, only 9, at 3,158. I bet Apple's the one. Now, let's see. I'm going to go to my other charts. At this point, I needed to go to the black charts. We don't have the Bloomberg up. So I just need to go to this list I have here on the left. If you're ever looking for the price while I'm doing my show, you'll find it right there in those 2 numbers if you're looking at Tiger TV. And what are they? At the top, it's the Dow. The top tiny little corner here just tells you the price of the Dow, the price of the S&P. So with that said, let's go on. We've got gold, and gold right now, I'm a little behind. So on this particular system, it's down 10 at 1786, with silver down 20 at 3.4, but high-grade copper is under 3.78, and you've got the dollar down 20 cents at 79.15. You've got bonds down 27.36. I'm going to talk about that in a moment. And you've got the euro that is now I can go to the other charts. Here we go. You got the euro. I've got it right here. My little euro chart. No, that's an E, a Z. I went and I did what I said I wouldn't do. I've clumsied up my chart page. Euro dollar, right there, the 2-minute chart made a peak E. That is really interesting. And that's the EUR-USD. Let's see what that's the 120-minute chart. All right, let me just do these things right now. What I'm showing you, this is what I show my subscribers every single day in my opening call. And right now, we are 3 positions long, 1 position short. And the the three positions we have long are fairly low price stocks, actually one or two or single digit price stocks, and there's a reason for it. I believe that we are getting to a point right here where the proof of the pudding has to be in the breakout in the Dow based on, I'm doing two things at once, three things at once, four things at once. With the volatility index, the VIX, so low in the 14s, the Dow really should be very much higher. With bonds pulling back, with the TLT under 122 at 121.58, the market actually should be quite a bit higher. So I'm going to say this one more time. I believe we've been in a bifurcated market. I'm going to show you a whole bunch of things in a few minutes. I believe also that we've got sectors that are just getting close to running out of steam. I also believe that there are some sectors that are going to turn out to be very good. And slowly, I think I'm beginning to see the signs that I can identify them. So hopefully subscribers will be able to get in early in a couple of trades. It might be a sector trade. That means if we time it right and it works out, it goes from the daily to a weekly. I don't even want to talk about monthly. Listen, I'm happy if we can go from a daily to a weekly. I like to keep our trades as long as we can. Sometimes we keep them for 3 minutes, and sometimes we can keep them for 3 months or 6 months. We'll see what happens here. So I want you to just show you this chart. You see, this is a big cup formation. It's a double cup formation, actually. Look, go all the way from there to there, then all the way from there to there. And what we've got is this cup formation says it's like an inverse head and shoulders, and the S&P E-mini, which we're looking at here, the December contract, spiked to a leg. I have no other way to count it right now, to a leg F, as the stochastic didn't quite confirm, although it's still at 85% in the 120-minute chart, and the unbalanced volume is still quite low, but the MACD is just showing a little bit of signs of wear. That doesn't mean this is an intraday chart, 120-minute chart. So I'm going to watch closely because 1458 will be the key level to watch today. If somehow or other in the intermediate term session today, that intermediate meaning going into the 3 o'clock time frame, it's able to get above 1460, 65 and a half to 1466.80, somewhere around there. Probably 85 because it's the futures. So if that happens, we're looking at the chance that you've got a high-level consolidation. So now let me go through the areas quickly that I'm looking at. Let me take this away, get it out of the way. There it is. Let's go back to and the daily chart of the E-minis is making this cup formation with a potential double top. So all I'm saying here is that so far the signs are still very good. There's nothing, I'm talking real short term here. But I am going to say that the volatility index, and I might have to go to my black charts for that. But in the meantime, let's see what I've got here. Have I got my volatility index done? Can't remember anymore. Not quite. I've got enough. No, I'm going to go to the black chart. I want to show you something really important. In the monthly chart of the volatility index, and then I'm going to take calls, VIX.X, what I'm looking at here is a situation that says the volatility index is in this range. If you're looking at a monthly chart that goes back, I'll squeeze it because you don't have to read what's on it. I just want you to see the blue line. See that blue line there? If you're looking at Tiger TV. Now, that blue line goes to the low of 14.72 in June of 1990. I would have to say that that's probably 22 years ago. At this very moment, we're trading at 14.28. 14.28 puts us in the range. 9.31 was the low of December of 1993. But this 14.72 area is in the range between 14, and I'd have to say I'm going to give it a little flexibility, between 19 and 20. We've been within this range a number of times, but we don't stay there for very long because there's that incredible period of volatility from the breakout in 1997 where it went all the way to 43, 45, and then it pulled back again and broke under it in November of 2003. So this volatility index in this range says it is buying pressure. But you expect something for it. You expect to see new recovery highs. Well, we've just seen that in the Dow, so that's a good sign. But there are lagging indicators, and that's something to really take note of right here. For instance, the IYT, just for now I'm keeping it black. The IYT in the monthly chart, I think I've got it in the white. I want white. So forgive me for switching charts. I know that people really like to see and sometimes like to print out. Yeah, I haven't quite finished notating the left side here, but the right side went to a rare peak G, but that's exactly what happens within the smooth peak G ChapmanWave methodology. Within 3 bars, you go to a new recovery high, all-time high in this case, 165% from the low in March of 2009. It goes to peak G in July of 2011 at 101.60 and then pulls back sharply, creates a trend line up at 70.82, makes an arch formation that hasn't even close to completed the arch, but it is the potential for an arch formation. So it's up to the transportation index to show it's got the metal to break it. This is the IYT, this is the iShares DJ Transportation Index, to break in the next 2 weeks, to break over 93.50, let's say 93.50 to 94. If it can do that, that's good action. But now let's put it into context of the S&P. The SPX has gone to leg, I'm calling it for now leg F. I'm not going to make a change on that. It's leg F in the Dow and the S&P. It is underneath the 1576 high of October of 2007. But it has a high so far last month of 1474.51. Got close today at 1470.96. Now, I've got a left side, right side price time match, which I could not believe. I did show it. I remember distinctly showing it one day and saying, I can't believe it because it says October. More likely it's the one that points to March of next year. But it does say that there's a chance that if the left side to the right side price time match in the ChapmanWave methodology works, we could test 1576 in October. At the time I said it, we were way down in the under 1230 to 1180. I remember that well. So I said, I'm just going to show it. I'm not even going to talk about it. I have to tell you it's there because it's right there for you to see. But I can only do one thing at a time. And so far, we've got to get above the 9-period moving average. Well, it's held the 9-period moving average. So far, that's all very good. And the Dow, INDU, is, in fact, right now in leg F up with a new recovery high, but not at the 14,198 level. But we did get to 13,066. I'll be back with Dan in Miami. Great questions with Dan in Miami, and I've got a couple of emails that I'll read it when we get back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 877-927-6648. Nice response in the market today to the jobs number. Up 61 in the Dow, up 6.52 in the S&P, and we're going to go straight to our first caller. We've got Dan in Miami, in Florida. Hi Dan, how are you?
Hi, Basil. How you doing?
Good, thank you.
I was wondering if you could take a look at NYA and the 2X crude, UCO.
Okay, so the USO would be the 1 times and the UCO would be 2 times, right?
All right, yeah, it's down $1 today. I was wondering if it's going to look like it's going to be a buy set up pretty soon.
Okay, well, let me just do this. Would you mind if I work on the USO? I've got the UCO, but I've actually done a lot of work on the USO. Great. So this is what I'm looking at, folks. It's really quite simple as far as I'm concerned. When you are looking at chart formations, you like to see things that set up and they produce the same repetitive patterns that you see in many other charts. And what happened with the crude oil, and this is the United States Oil Fund LP, this is an ETN, or it's not an ETF, right? I think it's an ETN. Anyway, so this is a note. So what we're looking at, it's trading at 33.41, down 52 cents. It made a low in the daily chart on the 28th of June at 29.08. Now, my methodology, I'll make it real simple. If you're looking at Tiger TV, you'll be able to see, I've expanded the chart quite a bit. I'm going to show these points of contact now. while we're doing it, I'm going to just change it. I'm experimenting here. I want to settle on one particular, oops, that's not right. I want to settle on a color. So I found that if I go to this for the charts, let me see, it'll come up. It seems to be a little bit better for you to see. So it goes, the ChapmanWave, you look for the lowest, most identifiable low bar, and on the left side, and that is on the 28th. It goes to peak A on the 29th, and then it makes a higher high, it makes a peak and then a higher high on the 5th of July, pulls back, holds the 9-period moving average, that maroon line. It goes to peak C at 38.84, pulls back, holds the support, and then climbs to a doji with a silent doji candle on the 8th of August at 35.37, and then it goes to 3 higher peaks. What I do in this particular instance, this is a particular technique that I love to teach, the sort of thing you want to do live, you want to do it with a chart that you can actually see, so I'm going to expand this a little bit more. And what I did was, there's a technique that I use called an instant restart, and that says if within 3 bars, after the 4th highest peak D, you go to a new high, you can start counting parallel wave counts. Well, this didn't do that. It took 1, 2, 3, 4. It was the 5th bar. So I put a down arrow and an up arrow saying there's a good chance, based on the MACD, the fast-moving average, that this can go higher. So I go to a G, /C at 36.45 on the 23rd of August. Then it pulls back and it hugs the 9-period moving average, spikes up to a doji high at 37.17 on the 14th. That is exactly what you look for in the ChapmanWave flat base restart. And what it says, not only will you come back, but you're going to come back and go underneath the starting point, and then try to bounce back into the arch formation. And if that doesn't hold, be careful, because there could be another larger arch. And that's exactly what happened. So what's happened here, the lows that were made back on the 25th of July, 32.45 and 32.46 on the 2nd of August, that's your support. Where did we go into 3 days ago? We went to 32.52. So now you're looking for a potential long position, correct?
Yeah, correct.
Okay. So I want you to show that the daily chart has done a good test, one good test, of a major level, and I'm going to now draw in right there. Are you looking at Tiger TV, or can you?
Yeah.
Okay. So I've drawn in the gray shadow there that says this now has to become a base of support. The MACD is still negative. Stochastic's flat. I don't like that. That says to me that crude oil is probably going to come down a little more. So I grab my 120-minute chart. I haven't got this notated, but I'll do it real quickly. So this is a peak A. It's pulling back. Yes, I've got a good feeling now for the very short term. So now let me go to the weekly chart, because you're looking at this as a position play. Am I correct? You would like to hold this for a good few weeks. Is that kind of the way you're looking at it?
Yeah.
Okay.
Yeah.
If you're looking to hold this crude oil, United States Oil Fund, the USO Weekly, I'm going to make a suggestion, and I'm going to take a moment during the break, and I'll just pinpoint exactly what I'd be looking at for you just to begin. I would not go heavily, but just to begin a position. Let's see if that's going to work out. Hold on. I'll be right back after the break and give you my summation. Okay?
All right. Thanks.
Thank you.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Dow's up 60, S&P's up 620 on this Friday, October the 5th. And what we've got here, we're looking at crude oil, USO, United States Oil Fund LP with Dan in Miami. And this is... I don't see a base just yet. I'm going to say to you, you need to wait a day or two. Let's see how Wednesday's low of 32.52 is handled. Because if there is a move in the next, I would be prepared to give up a little potential profit to rather buy it with higher highs and higher lows than the lower lows and lower highs that it's making. So I would prefer to see it about 34.04, maybe get into the 34.30 area or higher, and then on the pullback, if it holds, I would want to buy it. So I'm going to suggest not doing anything right now, because the weekly chart has a pattern that says we're right in a very important support area. The MACD hasn't yet crossed negative. The stochastic has gone to 72%. If the MACD fast-moving average starts to deflect back up again, that's going to help. And that also confirms for me that the 34.62 is the 9-period moving average. I want to see it close above there. It hasn't done that for 3 weeks. So that's my recommendation. Have a little patience. Let's see how it does it. I'm now here 5 days a week. At any point, if you see that you think it's coming into support, give me a call. I don't think I want to do anything, because if it breaks under 32.46, let's call it 32.20. If it closes under 32.20, then I've got to watch it, because the monthly chart has the pattern that I call the dreaded H, that turns, the lowercase h, that turns into an M. What that M says, this very week right now is the week that should be trading up at about 30. Oh, it should be at about 38 to 39. And that would, I would say, if it did that, I would say, wow, buy it, because if it breaks out above 42.07, the high of March of this, February this year, that would be really good. So far, it looks to me you're in this pattern of trading range, narrow boundary, making arch formations. Let it prove to you that it's got the strength. And you asked me about the NYA?
Correct.
Okay.
I agree. The weekly looks pretty weak, to say the truth. Yeah,
of the New York Stock Exchange?
Yeah, please. Yeah, thank you.
Okay. Folks, we're looking at, I got $NYA.X. That is the very broad 2,000 plus stock index, the composite index of the New York Stock Exchange. Now, what's very interesting here is that what you will see, I'm just looking at the charts. I think, yeah, that's very clear. That's good. I'm going to keep it in the white with the white and black. So, yeah, what I want you to show is, in the weekly chart, there was a double top that I called C1, C2. I don't want to go into it now, although it's Technical Friday in the ChapmanWave. But there was a pattern going back, and I'm going to show you how these patterns are so important. If you can identify the plumb line that makes the left side, right side price time match, we got that when you went from the low of 63.55 in July of 2010 to the low of 64.14, slightly higher, October of 2012. There's a big arch formation that went to a peak F top in the Chapman wave. That's very important, and there was a divergence between the technicals. Now then you had another rally from October the 7th, the week of the 7th, at 6414 up to 8327. March of this year. Then there was a little pullback and then a little rally, but that rally didn't go. It went to 83.05. It missed by $19, making that something like that, $22. It missed making a new high. I call that peak C2, a technique that I've developed over the years to identify so you don't miss out on a potential top. Well, it was a top, came down to the week of the 8th of June at 72.22. Now it's trying to run up as peak A, B, C, and again you've got a D, and the D is at 85.15.60. The high today is 84.42, but it's a good candle for a Friday. The MACD is very strong. Stochastics at 87%. I see nothing wrong with this other than on a short-term basis, the daily chart might be making a kind of a scallop, this cup formation, and it keeps making that, but it keeps making it and breaking out in what I call the ChapmanWave cup and ladle breakout. So, I see on a very short-term basis that we could be pulling back here, just a little consolidation, a little breathing room, but I don't really, I'm looking for these signals, believe me, I don't see the signals, and the VIX is based on the NYA, and the VIX is down in the 14s. So while it hasn't sparked a massive rally in the New York Stock Exchange, because the previous high was way back at 10,387 in October of 2007, this rally gets us to about maybe nearly 60% retracement. It hasn't even gone close to the previous high that I was talking about of 87.18 back in May of 2011. So when you say weak, I kind of agree with you that the New York Stock Exchange is a much weaker index than the S&P or the Dow. But this breakout in the month of October of the downtrend line, I don't know if you can see it, but if you can see it on the chart, let me expand this.
I meant the oil weekly, not the NYA.
Oh, I see. Okay, well, all right. That was a quick leap. I thought I saw it written there. Okay, so the oil weekly, the USO, I agree with you. That's exactly what I'm talking about. That is weak. The MACD, though, you see, I never fight when the MACD is still showing strength in the fast-moving average, and the slow-moving average is still moving up. I look at the slow stochastic. And if that drags it down, I have to watch real closely, because as soon as the fast-moving average gets even close to that red line, the green to the red line, that's where you could get a very strong bounce. And we haven't got there yet. So I agree with you. So I would say have patience, because if there is a buy signal that comes in well above the low of 29.02 on the USO, that's going to be very important, because that could be a successful test, and then you could get a very strong rally. At this point, I'm pleased we went through it, because there's another chart I'm going to look at in a few moments, but I wanted to look at it a little closer, and I have looked at it closer. I don't see a rally coming just yet. Could happen in the next couple of days, but we'll have to see how it tests this. We've got an exact left side, right side price time match in the daily going to 3 days ago. So
okay.
Hold off. Give me a call when you see that you think it's starting to bottom a little bit, okay?
Right, thanks.
Thank you very much for calling. Good call. Now, I want you to show you this, folks. This is the NGZ12. It looks, you can see the green. This is natural gas December contract. I'm going to squeeze it close. Now, look at this. As you see it, all of a sudden, look at the pattern that was actually saying, yeah, it's kind of good, then saying, oh, it's just in a trading range. Now look at this very closely. Look. Now what do you see? You see a massive base being built up in the daily chart of natural gas. If natural gas can break above, certainly if it can break above the high of the other day of 3.81, it's trading at 3.67 right now. If that breaks out, the first target will be somewhere around 3.83. But if it breaks above that in October into November, then suddenly for the first time the weekly kicks in as being very positive, even though it's in leg D, MACD and stochastic, and the poor old monthly gets a chance for the first time in since July of 2008 to maybe close above the 9-period moving average. We've got a caller online. We've got John in Philly. Hi, John. How are you?
Hey, good morning. Basil, thanks for taking the call.
My pleasure.
Basil, I wanted to ask you about the DAX, the German stock markets.
Yes.
It is behaving similarly to the Dow. I'm wondering if you could show us what the weekly and monthly ChapmanWave counts are on that and the implication thereof.
Absolutely. If you don't mind, I'm not going to the DAX per se. I'm going to the iShares of the Germany Index Fund, which I believe is really close. I used to get the DAX and the others for some reason over the last couple of years, or a year or so. I just haven't been able to get it. I'll call TradeStation and ask them what it is. But
you must not be. Go ahead.
So I don't trade this, so I don't get it. But in the meantime, you could tell me, does this look very much like your? It should. It's the iShares Germany Index Fund. So
I have to tell you, the DAX is much, much, much stronger than the EWG.
Oh, then you know what? I don't want to give you false information. Because I want the index itself. Because that's exactly the reason why I asked you. People tend to make that mistake sometimes. They trade an ETF, a foreign ETF, but when you look at the charts really closely, sometimes they close and sometimes they could be quite a bit off, and a lot has to do with scaling and all sorts of things. But I can tell you that on the EWG, the chart that I'm looking at has a double top, and this is the iShares Germany Index Fund. If it's able to break above 2383 decisively, in other words, if it can get to 2450 on a weekly basis, that is, whatever week it does it, that Friday, if it can close nicely into the 2450, for the first time it's tackled the week of the 5th of August 2011, that horrible period. It's the first time it's tackling that bar decisively, and that'll be very important. Meantime, the stochastics at 91%, and the MACD is holding very well. So we've got a cup formation. We've got a left side, right side price time match. I can now move it one bar across, and that'll take me to, that takes me to this week, so it still missed it. Well, the magnet of 2383 is there. I suspect that it's going to attempt to get to it maybe next week, but so far it's holding really well. If the stochastic starts to drop under 80%, it's at 91 now, that's very strong. But if it does it, and it does it very quickly, that'll be a failure pattern. So the parameters are very clear. A close above 24.10, very positive. A close below 21.80 starts a negative pattern, especially under 21.62.
Gotcha. Thanks for taking a look-see, Basil. I appreciate it.
Thank you very much for calling. I appreciate that. We had Ron call, and he dropped off. I'm sure he's listening if he can. I just think he had a phone line problem. GPL is Great Panther Silver. Great Panther Silver made it. This is one of our sponsors, a fabulous sponsor here. Made a low of 17 cents in November of 2008. It ran up to... Now, folks... I really should have a tally. Maybe someone will do it for me. Just a tally of how many times in the charts you see a peak D, at least a peak D, and then a pullback, but it can go to E and F, and then you get an even sharper pullback. Look at this. The low in the monthly was at 17 cents in November. It goes to peak A in March of 2009, higher peak B, 62 cents in June of 2009, higher peak C in September of 2009, 3 years ago, $1.10. Then it goes to peak D on January of 2010, $1.13. It pulls back a little bit, holds the 200-period moving average of 0.64. Has a little bit of a run, and it skyrockets to $5.04. Then it makes a candle that I call the long-legged doji. That has a whole bunch of meaning that I love to explain and discuss, especially when we have these... especially when we have these kinds of patterns that repeat very often in the character that they form. And don't forget, folks, here at TFNN, if you go to the front page, we're having the Great Panther Silver giveaway. Just check on the front page for details. Just giving away the metals. Just go to that front page and you can get, I think, 2-3 times a day. It's an amazing thing. So now Great Panther goes to there. What happens with this particular candle, it acts like a magnet. Wherever it goes, whichever direction, it's going to come back and test the middle of that. And lo and behold, it does. Comes back, tests 409, even though it went down to 252. Comes back down, trough A. On the way down, they troughs. Trough B, trough C, trough D at 1.51 in May. Bounces, comes back, tested 1.52 as 1 penny higher. So that's very good. Now it's in leg A in the monthly. Then you've got leg C in the weekly chart. And I actually had this all notated, but for some reason I lost that information. And now what's very important is if Great Panther Silver GPL trading at $2.25 on the weekly chart, a close above exactly here is above the 9-period moving average support of 214. MACD's strong. The stochastics at 85%. I like it. But I would not want to see it by Tuesday or Wednesday of next week break underneath $2. If it breaks under $2, that's going to be at least a short-term failure pattern that says, oops, be careful, I just don't have enough strength, and I'm going to drag down the MACD. But it's made a peak F double top at $2.48. That was on the 14th of September, and it's holding really well. And what is it doing? It's making a pattern that I love to look at. It's called the oval pattern. So now I have to change color again. Oh, I'm getting tired of changing colors. We'll just keep it this color. No, we won't. Full the color will be black, and you see exactly what I'm looking at. That's a very important pattern. I'll talk about it when we get back, and we'll go through some of the charts of the euro, dollar, etc. Basil Chapman, 877-927-6648.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Managing your money is a business, and I want you to succeed in any economic environment. The markets are changing fast, and if you do the right thing at the wrong time, you'll have your head handed to you. But if you do the right thing at the right time, the rewards are extraordinary. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, and I have a roadmap that'll guide you and give you the flexibility of change. To succeed in these markets, you need a competitive advantage. And for one solid day, I'll teach you the language called Japanese candlestick charting. Without it, you're dead meat. With it, you have an unfair advantage. Learn the techniques that provide you the strategy for entering and exiting a trade, plus learn the best trading patterns in the business. It's not enough to do the right thing. You've got to do it at the right time. Join me October 19th for a one-day online course, Candlesticks, Silent Signals, and the Speed of Trust. Go to the homepage of TFNN.com and sign up today, because an unfair advantage is a great thing to have.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. We are back, and let's run through the last segment. So the GPL needs to hold 211. That's Great Panther Silver. And if it breaks underneath it, I'd be real careful, because there's a chunk of space that needs to be filled in between 193 to 175. But so far it's holding really well. If it's able to climb above 2.38 and retest the highs, I think it will break to the new high, to new recovery high above 2.48. But right now, it's just digesting huge gains. Now let's go to this, the white charts. Here we go. I want you to show you the GLD. The GLD, at this point, I'm calling it a peak F in the daily chart. I have no proof that it's going to be a peak F of substance, unless gold is able to really spike powerfully higher from here. I would not be surprised to see a little bit of a digestive stage coming in now. What would be a break above that 174 round number in the GLD on the 28th of February? That's important. Round number 174, break and hold above it. Oh, anytime, Monday, Tuesday, Wednesday, that'll be very positive. I'll call that leg C up if it breaks above it. But at this particular point, this quick congestion area here looks to me like gold. Let me see if I got the 120. So the 120-minute chart is also saying big rectangle formation. Don't be surprised if there is a pullback that it's going to test 168, somewhere around the 168s, and then we'll see what happens. But certainly a break into the 174s, that would be really good action. So I wanted to go through that. I wanted to show you why things are coincidental right here. Look, EUR-USD made a peak in the daily chart of a peak D. That was using an alternative wave count in the Chapman wave. It also says, yeah, sure, you can retest the high of 1.317 made on the 1.3166 was the 1.3168 was the high of the 14th. But if it does that with the 200 period moving average, the gray line moving like this and breaking in a Chapman wave cup and ladle formation and a successful retest of this base that's been forming, and I call it a base, but it's a base that's forming at about the 1.275 level, that says, wow, there could be a real quick spike up to 1.328, the high of the 1st of May. What would that do? That'll take the market with it, and finally you will see that the volatility index is really kicking in, and that will start to drop into the 13s. If it drops into the 13s and holds, I would say to you, looking at the USZ, that's the daily bond contract. That bond contract got repelled at this inside track Chapman wave downtrend line after a pattern that I call the drop bucket pattern, merely a double top. It's an inverted dreaded H pattern. You go to the left side high of 153.5 back on the 4th of June. You pull back and you go back to a slightly higher high, 154.17, 30 seconds on the 25th. Then you break underneath the bottom of the cup formation. That's usually a negative to go at least double to the downside. It's done that, then it makes an arch formation. So I'm watching bonds, because if bonds start to take out 146, this is December bonds, 146, then they will certainly test 145. That's the 200 period moving average on the daily chart. So bonds are saying, the three bears, that's the dollar, DXY, bonds, and the VIX, the volatility index, are saying, hey, we're having a tough time rallying and holding any rallies here. We're making arch formations. And that says that you've got to expect that if that happens, then the euro could very well break the top of 1.3176. And then you're going to have a very powerful move to the upside. So my parameters are very clear. On the Dow, as we go out and have a great weekend, as we go out, if the Dow closes by Monday afternoon in the 13,690s to 13,700 area, that's going to be really powerful. If instead we stall by the end of the day, we start to slip, then we're in this digestive period, little base building in the market as we try to go higher.